Hello and welcome to another Smaulgld live stream. It is Saturday, August 24th, 2019, which means it is Saturday Night Silver with Smaulgld. And today we're going to take a look at a lot of silver indicators. We've got a whole bunch of charts to go through. I want to start out though with a chart that I never showed before because I never bothered to make one, but it is important because I always talk about how silver pumpers make general statements. Pumpers in general, they like to say general statements. Silver is so useful. They are finding more uses for it every day. And the implication there is that silver demand is just rising because yoga pants or whatever particular industry they want to point to and insist that this means the demand for silver is skyrocketing. Now, it's very easy to go and get the numbers. The Silver Institute produces them. Renfitted, the Reuters group produces silver industrial statistics. And I just put this together. These aren't exact numbers. They're directionally correct from the Silver Institute. And when people say, like electronics, well, we could not live our lives without silver unless there were silver for electronics and so on. And there's more and more electronics being used and solar power, there's going to be such a great demand for silver. Well, you got to look at the numbers. And I'm not trying to downplay silver, but you have to know where the demand comes from. Now, this chart shows what you're looking at. If you don't have a screen, the chart will be on smaulgld.com tomorrow, or you can look it on a bigger screen when you're not just listening. But this is basically silver demand by millions of ounces from 2011 to 2018. A big driver of silver demand has always been jewelry. And jewelry's actually gone up over the last 9 years. Under 200 million ounces a year in 2011. It peaked in 2015. But last year, 2008, it was over 200 million ounces. So jewelry going higher. And the real driver of jewelry demand is India. I don't know if you guys remember, but China is not a big silver consumer. In fact, they export a lot of silver. They mine a decent amount. They're like number 3 or 4. They don't hold on to it in big amounts. The investment amount of silver for the Chinese is actually less, not just per capita than Americans, but actually in gross ounces, gross tonnage. Americans buy more silver coins and investment bars than do the Chinese. Now, India is a different story. India buys massive amounts of jewelry, and also they are the main driver of silverware. I think they account for nearly a quarter of all the silverware sold in the world, and you can see since 2011, silverware is also up. So two areas of demand, jewelry and silverware. 2011 to 2018, they've gone up during that time period. Now, most people like to talk about silver in terms of the collapse and you have to have silver. Well, jewelry and silverware are things that people buy not in a collapse. They buy them because they got money. They like it. It's shiny. It looks nice on the table if it's silverware. It looks nice on the arm, on the neck, or on the finger if it's a ring or if it's a necklace or a bracelet. Those are big drivers of demand, and both of those areas are up. Now, coins is a separate issue. Coins are about the same as they were in 2011, but remember we had that big spike pretty much from 2012 to 2016. But coin demand is flat over the last 8 years. However, I was looking back. Remember I was saying how coin demand, let's put up another chart. Silver was never a big investment metal up until like 2009 and 10. Look at this chart here on American Silver Eagles. You can see 1996, 1997, they're selling 3 million, 4 million, never really more than 10 million American Silver Eagles. It wasn't until you got into, you could see the financial crisis, and really a couple of years after that the U.S. Mint started selling 39, 40, 44, 47 million American Silver Eagles. So while the demand, it spiked there, it's pretty much leveled off in recent times. But let's now go back to our chart on silver demand. What I do want to mention is even though we're at pretty much a flat rate of over 200 million ounces that go towards worldwide silver coins and bars, if you go back to, say, the 90s and you look at the Silver Institute reports that they had, so for example, I'm looking at 1995. In 1985, only 13 million ounces worth of silver were used for investment coins and bars. So you can see it's really gone up. You're over 200 million today, even though it's down from the peak of almost 300 million. In 1990, it was 31 million. 1994 is 42 million. It was creeping up, but you're talking very insignificant amounts. And so coins and bars have actually moved up in investment demand, even though there's still a relatively small portion of the overall silver demand. There's still a large portion, a much larger portion than they were 15, 20, and 30 years ago. Now, another one you hear all about is electronics. People, there's more electronics. There's going to be more electronics. We can't do without silver. But look what's happened. In 2011, electronic demand was almost 300 million. The year before, in 2010, it was over 300 million. And you can see it's dropped back now. I think that's about 230, 240 million. So the idea that somehow electronics, people are hanging their hat on that, just in general, yeah, everyone's going to have electronics. Everyone's going to have an iPhone. The demand is enormous. Silver's going to be needed, and better get your silver now because it's going to run out. Well, they're using less and less silver in electronics. So you can see the big drivers so far have been jewelry and silverware the last 8 or 9 years. Now coins and bars, flat, but up big time from the 80s and 90s. Electronics, you can see, is falling down. Solar's another one of those where they've been insisting that there's going to be massive demand for solar. Well, there is. There have been massive amounts of solar installation since 2011. Think about that. Last 7 or 8 years. But the amount of silver that's being used in solar panels is not really skyrocketing. You don't just extrapolate 2010 numbers when they used to use X amount of silver in a solar panel and say, well, we're going to use 10 times, we're going to install 10, 20 times the amount of solar panels we did in 2010 by 2025. Therefore, we're going to use 10 to 20 times the amount of silver. Wrong goes star. It doesn't work that way. They thrift it. They use less of it. And if they had to use that much silver to do solar, then they wouldn't do solar. It's already a long putt to try to get solar to work. If they had to use as much silver as they used to use in a solar panel 15, 20 years ago, they would stop doing it. Again, it's not one of those things where they're going to have to do solar and they're going to have to use 10 times the amount of silver that they use today. No, if they have to use 10 times the amount of silver that they use today, they won't. They'll switch to another. They can use aluminum. They can use nanoparticles. There's all types of advances in technologies where you can reduce or eliminate silver in many instances. Other industry. Now, this is the whole, they are finding more uses for it every day. Well, if they're finding more uses for it every day, the demand for it has gone down since 2011. So all those yoga pants or whatever else they try to tell you, silver is so useful. Yeah, they're using less of it in other industry. Now, here's a big one. Where coins and bars have moved up and electronics have, over the last 20 years, have increased, even though they haven't increased in the last 10, the demand for electronics is higher than it was 30 years ago for silver. Photography is one where it's pretty much down. It's going to be gone in the next 10 years. It's down to 39 million ounces, and that was down from about 55, 60 million in 2011. But if you go back to, as I mentioned, the 1995 Silver Institute report, photography in 1994 took up 220 million ounces. So you can see where basically electronics has replaced photography as a demand driver for silver, and of course solar as well. But the big key here is that silver has become an investment metal in the last 10 years. Now, prior to, if you go all the way back to 1965, there was no need for investment metal because you get silver as part and parcel of carrying pocket change in the United States. Now, there was massive amounts of silver demand because every country had to produce coins, and the United States also had silver certificates. That's one of the main reasons they got rid of silver in the coinage, was Kennedy and Johnson were concerned there would be a silver shortage if they had to make all these coins, because silver was becoming increasingly an industrial metal for which there was demand because they had electronics coming up in the 50s and 60s. And they wanted to reserve the silver for industry. And then basically every country, Canada in 1968, US in 1965, England, all the countries, Australia, India, China, Italy, they all got rid of their silver coinage. So that took away a lot of demand. But the demand for silver on the investment side, after the Hunt brothers in the 80s, there really was none until really the last 10 years. So that is a big driver of demand today, even though it's only 10-15%. It used to be close to 0%. And as I mentioned many times, if we do get a big boost in gold on the investment side, then you will see a rise in that investment demand. Silver, which we're going to take a look at a chart. We might as well do that right now. That is increasing. Now remember though, if the price of silver increases a lot, you are not going to get the silverware and the jewelry demand. That'll just offset because people won't buy it. If it's too expensive, Indians they're going to hold off and not buy silverware. They're not going to buy silver jewelry. In fact, they'll probably sell the scrap into the market. We've got a chart on that. But look at this ETF demand. It's kind of hard to tell. We've been looking at this for the last month now, every Saturday. The investment silver is going straight up. If you look to the far right, you can see the amount of silver in SLV, UBS Bank, Julius Baer, ETF Securities, Deutsche Bank, all going straight higher. Sprott physical silver. So plenty of silver pouring into the ETFs far in advance of the pace of the price increase. But you can also see silver's been, just like, as I mentioned, in around the time of the financial crisis, you can see that people have been stockpiling silver pretty much for the first time in, I'd say, 100 years, because people didn't invest in silver when the silver coinage was in the United States. So in the 40s, 50s, and 60s, you really didn't invest in silver. In fact, at a lot of points in history in the early 20th century, in the mid-20th century, the price of silver was lower than the value that was in the coin. So the concept of free silver was you would bring 35 cents an ounce silver to the treasury or to the mint, and they would print up a 0.77 ounce silver dollar, for which there wasn't 35 cents worth of silver in there. So investing in silver didn't make any sense back then. And then even after 1965, when they took the silver out, there was still a lot of silver in those coinage. It really did not become something to invest in until Nixon went off the gold standard in 1971. And that's when the Hunt brothers got in and that's where silver started to move higher. But after the Hunt brothers debacle, in the 80s and 90s, no one invested in silver until Buffett saw an opportunity in the late 90s based on all the supply demand. He thought this is good for a pop coming up. But then, after he sold, silver, again, was not a big investment. The demand driver was not investment. We've seen demand now for silver, especially in 2015, reach 20-25% of overall silver demand. So the investment portion is important. It's small, but it's definitely, I would say, since the financial crisis, part of its, I don't want to say permanent demand because we saw what happened to photography, but it is part of its current demand. All right, now that's the silver ETFs, but there's better charts than, well, not better charts than that. There's easier charts to see. This chart is the one from Nick Laird that shows the same concept, but this is not just the ETFs. This includes the COMEX. The COMEX vaults, JP Morgan, HSBC, Coins and Things, Brinks, Scotia Makata, they all have COMEX approved warehouses. So when you take those warehouses, you add them to all the ETFs, you add them to gold money, bullion vault, purse mint storage, and a bunch of others, you get a stockpile of 1.14 billion ounces, or 1,142 million ounces. And you can see it's gone straight up just in the last 6 weeks, 8 weeks, continues to go higher. But you can also see where that chart has been heading higher. It's just that it went vertical in the last 6 to 8 weeks. But it does show the investment side of silver increasing pretty much. 2008 is when it really started to take off. You can see it. It used to be only a couple of 100 million ounces that were held in identifiable stockpiles, and now we're over 1.1 billion. It's a very important chart there. And speaking of COMEX, let's look at the COMEX. Now, COMEX warehouses are pretty much stuffed anyway. They haven't really they've gone up. I mean, they've gone up this year too. They've been going up since 2017. You can see on the chart there. But in the last 6 weeks, 8 weeks, 2 or 3 months, they've gone up steadily, but nothing spectacular since they hit the 300 million mark in mid-2018. And right now we're at 213 million total ounces. So plenty of silver at the COMEX, and about 100 million of that does go to settle contracts. And speaking of which, the contract value that we have right now, there's about, with the open interest, there's probably a billion, 1.1 billion ounces worth of contracts. But you got 300 plus million ounces of physical silver in those vaults. So the concept of, they're not really owners per ounce, but potential claims on those contracts, it's only 3 to 1, 3.7 to 1. So plenty of silver at the COMEX, and also robust trading on that COMEX silver. And who has the silver, which vaults? These are not the beneficial owners. These are just the entities that run the warehouse. You got Brinks, Scotia-Mocatta, HSBC, Delaware Depository, JP Morgan Chase, and Coins and Things, CNT. The two biggest ones are JP Morgan Chase, about 152 million, almost half of the silver. We saw the other day on Solid Gold Sunday with Smaulgld that HSBC has about 65-70% of all the gold in the COMEX gold warehouses. But for the silver warehouses, it looks like JP Morgan Chase is the big winner, and Brinks making a run at it. And also recently, it looks like Coins and Things is boosting its silver stockpiles there as well. And that's the depository silver. But let's take a look now, a little more detail, another chart from Gold Charts Are Us. Last week, let's take a look at last week's chart. We were astounded last week that the Deutsche Bank, let's pull up that one first, there we go, that the Deutsche Bank ETF had increased 24% in the last 4 weeks. So they had increased their ETF, 7.1 million ounces were added, and they got all the way up to 36 million ounces based on a 4-week increase. We saw SLV increase 13% in those 4 weeks, another 13 million, 24 million in iShares. So you can, this is a hard one to see. The point is, the last time we looked at this chart, there was about a 5% increase overall in the last 4 weeks. Well, now we update the chart to take into account the most recent 4-week period, and we see an almost 5% increase, of which Deutsche Bank added another nearly 2 million. So they're at 36 million. You can see that there's an SLV, 385 million ounces. That's a record peak for them. The SIVR, ETF securities, 111 million ounces in that particular ETF. The COMEX vaults total actually down 1.4%, but no big deal. They're still well over 313 million ounces. Gold money has up a bit, 27 million ounces. Bullion vault has 25 million ounces. Sprott has close to 59.5 million ounces. Also, the Central Fund of Canada has 57 million. I think Sprott owns that now, so if you put the two together, they got almost 115, 120 million ounces in those two entities as well. Julius Baer, 10.9 million. The Perth Mint is storing about 7.5 million ounces Union Bank of Switzerland's ETF, about 7 million. Canadian Mint has a depository agreement, a program where you could store silver. They have 2.6 million. The Anthem Vault, not a big player, 47,802 million ounces. And there's probably others, but those are the main ones. And all that silver comes to over 1.142 billion ounces. So silver as an investment, definitely popular. It hasn't impacted the price, but it has moved up. Let's see if there's anything else from last week. No. All right. Let's see now. I do want to show you, we did look at the American Silver Eagle chart. And you could see that on Smaulgld.com. But let's look at scrap silver. Your scrap silver, you could see 2011. As I was mentioning, when the price rises, that's when people dig their stuff out and start selling it for scrap. And when the price goes down, you could see the amount of scrap silver that comes to market also goes down. Now, my silver stockpile rose today because I went to the post box and I received this very kind and generous cash sent to me, CACHE, of right here. These are Roosevelt dimes, 90% silver. That's one entire $5 worth of silver. Quick calculation on the price of silver. If you know how much silver is in a dime, which is not a very conventional amount, these do make terrific barter items, but it's very hard to tell exactly how much silver is in a dime. If you need to know the trivia, it's 0.07234 ounces worth of silver, so it's not 0.10 ounces. Here we go again. Seems like we get into a certain point and then they cut me off on YouTube. All right, we're back. We were talking about the silver dimes and how there is not a easily recognizable amount of silver because they're not a tenth of an ounce, even though they are a dime. There is, we were mentioning the trivia, 0.07234 ounces of silver in each of those dimes. And I want to thank the Smaulgld subscriber who sent me these wonderful silver dimes. Oh, I know what I want to say about these silver dimes. They are easily the best and most recognizable barter silver. Why do I say that? Well, some people, they don't make the 50-cent Kennedy half dollars anymore. A lot of people have never seen them, and they don't circulate freely. So yes, they haven't really changed the design. They do make them, but you have to buy them. They're like a collector's item. They're not worth anything, but they're not for circulation anymore, the Kennedy half dollars. And the ones that are in existence, people don't use. And there's one year, 1964, where the Kennedy half dollars were 90% silver. Yeah, it's a worthwhile coin for the silver, but people might not recognize it. And then it gets tricky because between 1965 and 1969, I don't know why they did this, they made them 40% silver. So you have to calculate that. So, I mean, they're good coins, but they don't have the recognizability. Now, the quarter is almost as good as the dime, but it's not, because the quarter used to all look alike. They used to all look alike other than the number on them. But now, for the last 15 years or so, they've changed all, maybe at least 2009. They've been doing the state quarters and all different types of special designs. So the back of the quarter is different today than it was back then. So there are certain quarters out there that don't look like the silver quarters from 1964 and beyond and back. But the dime is the dime. They really have not changed the dime. In fact, what do I do with them? If you look at the dimes, here they are. They're exactly just like a current dime. You got FDR there on the front, on the back you got the fascies, very fitting there, and there they are. So very good barter item. Thank you very much for those. It's always good to receive a generous gift like that with a nice note. All right, let's see what else we got in the charts. We've done the Silver Eagle demand. We showed how that demand has increased in the last 10 years or so. Let's take a look at the unsustainable gold-silver ratio. All right, let's first take a look at where we are just on Friday. Now, Friday was a big day for gold and silver, but gold actually went up and so did silver, so gold held its own versus silver. At some point, I think it looks like I was saying if when gold got to 1,500, that's when the gold-silver ratio would start to come down because you'd start to see some interest in silver's investment side. And we have seen that, and we were up around in the 90s before it hit 1,500. But I think as you go higher, 1,600, 1,700, 1,800, and I'm assuming, again, it's not investment advice, but I'm assuming that's going to happen just given the general background of everything with the trade war, with negative interest rates ballooning, with Trump outwardly saying, I want the dollar to be worth less, China working on making the yuan worth less, the Fed notes the other day from the minutes talking about how they wanted to, they were kind of annoyed that they didn't print as much money as they could have during the QE periods. They could have bought more assets. They're looking forward to discussing doing more of that, even as a preemptive measure. So it doesn't seem like, at least like in 2013, where people were concerned, the U.S. was concerned, the Fed was concerned that maybe they were overdoing it and they were trying to taper and put the genie back in the bottle and try not to let things get out of hand. Now, they're saying to themselves, what get out of hand? We're fine. In fact, they like the idea of negative interest rates. Why? Because they don't have to pay interest. It's the best thing. Everyone was always complaining, at some point, the interest on the debt's going to be so much, it's going to crush the whatever. There is no interest on negative yielding debt. In fact, you make money issuing bonds. So anyway, that's why I think that the price of gold for sure should continue to grind higher. You have major investors saying that this is where they see a Delilio and Mobius, and they're all saying that they're putting money in Tudor Jones into gold. So it is catching the eye. And of course, silver is the junior partner in all this, and if it does continue, gold continues to rise, I expect silver to follow it. But you can see the gold-silver ratio didn't really come down much, even after yesterday's big move. The 1 month ratio, again, it was in the 90s at one point. It's come down a bit, but it really, the gold-silver, and I said this for the last 5 years. Let's just look at the 5-year ratio, and everybody was on YouTube, all the pumpers saying, sell your gold now and buy silver. Constantly. I mean, you can go back and you can see them in 2012, 14, 15, 16, all saying this. It's got nothing but basically straight up. So the gold-silver ratio, and that's because gold held on to that monetary investment component, and people are ignoring the silver investment component. But I think that's coming to an end, and silver will start to be looked at again. Doesn't take much of a look or much of a purchase for it to happen. It takes more than just people buying physical silver on SD Bullion or Money Metals Exchange or Golden Eagle Coin, the affiliates links that I have on the Smaulgld site. And people have people have not been buying the last 3 or 4 months. It's very interesting. There was periods of time, especially in 2015, when Smaulgld had a much smaller audience. Far more sales being made then because there were far more sales being made in general. I think the physical market has basically shut down. Not shut down. I shouldn't say that. Wait, let's go back. Hold on. Hasn't shut down. Slowed down. But you can see here, it's not like it was in 2015. I guess we're spoiled because if you go back 25 years, you were talking 13 million ounces, 20 million ounces, 30 million ounces. So it has 7 or 8x, but it's stabilized. You can see since 2011, this is worldwide, we're about where we were in 2011 last year. This year, we're probably a little better. In fact, I'm looking at the U.S. Mint numbers, and there were maybe 13 million so far sold American Silver Eagles, and that'll probably, let's look at last year. Yeah, last year was 13.36 million. I haven't updated this chart. It's at 7.5. We're at about 12.9. So yeah, it's August. In the next September, October, November, We probably should pass 2018 numbers and probably 2017. We might hit 20. No, I don't think so. We do about another 4 million. Might get close to 2017's 18 million. But that's not going to drive the price of silver higher, and it's not going to make a significant dent in demand. But let me just show you that concept. This is a chart that we look at from time to time. In 2006, you can see silver coins and bars were only 5% of overall demand, and industry was 70%, and silver and jewelry were 25%. Fast forward to 2015, we're not there now, but of course that already happened. But look at this. Look at the difference. Big silver demand. I think they were at a point, they were worried, just like they were worried when Kennedy was worried with Johnson, that the investment in silver today versus the silver required to make coins back then was eating into the industrial silver demand. And it's important, the industrial component, that silver be relatively cheap. If you got to use it for coins, you're taking it away from the industry. And if the industry is competing with it for coins, the price is going to go higher, and industry is going to pay more, and then people are going to pay more. So they created inflation anyway by taking the silver out of the coins, but you might have gotten inflation anyway because all that silver is going to be used to make coins. Never thought of it this way, and that would have driven the industrial costs higher because the price of silver rose. Similarly, you have the same issue here. 2015 was a huge year, and if it had continued to grow, you might have had 33-40% of overall demand going in just the people hoarding silver coins and bars, which was driving the price up. The price was in 2015 at $50 an ounce. Now, it didn't really impact finished good prices, which is encouraging because let's say the price of silver goes to $50 again, which it might, who knows. We saw in 2011 that there were no shortages. The prices of electronics didn't go higher. They just eat the cost because each electronic doesn't have. In fact, electronics also have platinum and palladium and gold in them. They're probably more concerned about that than they are the price of the silver. Alrighty, what else do we got here on Saturday night silver with Smaulgld? Let's take a look at a 10-year price. Even though we've gone up, you can see, if you look to the far right, really for this chart to start looking nice, you got to get in the mid-20s. You got to get to 25 or so, because right now it still looks like it's just bouncing along the teen bottom. And right now we're what? $17. Just a little bit above $17. All right, that's all I got for you tonight. Let's see what you guys got for me in the comments section. I'm going to put up the fundraising page, the Smaulgld fundraising page for all of the generous patrons and Subscribe Star members and PayPal donors and Litecoin and Bitcoin donors with their QR codes and mug stackers. That's how you help the site out. You go to smaulgld.com or you look at all the links below this BitChute and PayPal and you donate or you purchase your precious metals or your coffee or your mugs from the Smaulgld site or below the links, and Smaulgld gets a small commission. All right, let's see what you all are saying in the comments. All right, we've got the full crew here. All right, let's see if we got some good questions. Live chat. All right. Phil, the two Phils are here. McCain and Quinn. Averell Blackwood, you and Wall Street for Main Street live at the same time. Pressure. Well, we're in competition. Mike Hermes. Wow, so many uses and it's also money. Yeah, Mike, that's an interesting dynamic. That's a dual-edged sword. The fact that silver is useful and is also money. The reason gold is actually more monetary is because it's more expensive and is viewed more as money, and therefore it doesn't get used in industry. You actually, for money, you want it not to be so useful. That's been the problem with silver. All right. YouTube mistreats his live streams bad. Happens all the time. They cut me off here. All right, greetings, Lewis. All Max is here. DB Stupid is here. Silver solder is only like 8% silver. Silver is lightly used compared to tin and lead and solder. Okay. DB Stupid says hit like to show some support. You know, actually, I don't push this, but I should. I don't want to have YouTube subscribers, but supposedly it helps. I'd rather have Smaulgld patrons. That's a good thing. I can care less about how many people subscribe. I love when somebody thinks they don't like what I said about silver, so they unsubscribe. Like, that bothers me. If you're not paying anything, I don't care whether you hit the subscribe button on YouTube or not. It's not like you've denied me of anything because you've taken away your subscription, which you didn't pay anything for in the first place. Anyway, but people push that. They want more subscribes. They want more likes. I don't ask for those, but I suppose it does help. Single cell organism. Love your work, Smaulgld. Well, thank you very much. DB Stupid. The quarter is easy to tell. Just drop it on the table. The dime is harder to tell. Well, yeah, that's true. That's true. There is an advantage to the quarters. I'm playing up the silver dimes because that's what I got. That's what was sent to me. If someone sends me silver quarters, I will talk. Probably they'll be my favorite. But right now, I cannot be happier. I have 50 of these dimes. You can hear them. They're all silver. Sent to me via the post, which again is on your screen there. That is the Smaulgld LLC, P.O. Box 714, Dover, New Hampshire 03820. Ann is here. Chuck and Platt. We got the old crew back here. Chart is fuzzy, needs glasses. I think it looks like that all of what I'm putting up is not showing up. This is not good. Maybe it'll show up when they upload the video. Again, I hope every chart I put up cut off again. Now, when I was cut off, I was reading a report from somebody saying that the chart was blurry. And I was explaining that that I hope that YouTube has properly shown all the charts I've shown tonight. If they haven't, I was saying you can go to smaulgld.com and they'll all be there and they'll be very easy to see and you can look at them there. Apologize, that's the second time that I've been hit tonight already. And I don't know if the charts have all shown, if as I've been talking about charts and pulling them up, whether you've seen them at all. Because what I'm looking at now on the live chat is a blurry chart of the silver demand 2011 to 2018. All right. DB Stupid. I'm hearing reports of Chinese retail demand for gold spiking right now. Well, what's spiking is Hong Kong demand. That makes sense. Paying up to 30% over spot. I heard something similar, a little less than that. Devalue on RMB might make it a good topic. Well, this is in general. Okay. For years, I have been railing against this whole China to crush the dollar, gold back yuan, and I said the price of gold is going to rise, but not because of that dollar collapse nonsense and gold back yuan and China to crush the dollar and the Belt and Road and multipolar world and all that stuff. What I said and have been saying, just because I've been saying it a lot doesn't make it right, but it has been right, is that gold's going to rise because of China, but not because China is going to crush anything, but because China is going to collapse and China is going to devalue its currency and we're going to go to negative interest rates and they're going to print everything that they say the United States is guilty of, the world is guilty of even more and worse when the world emerging markets like China and all the other countries borrow money, print money, build bridges to nowhere. They're doing it in dollar-denominated debt, so that makes the dollar valuable because they need it to pay back their debt. Doesn't mean that the United States isn't profligate, but again, the Fed has positive interest rates. The rest of the world has negative interest rates or zero interest rates. This is what I've been saying all along, is it's not the dollar that's the reason gold is going to rise. It's the entire debt-based fiat Ponzi scheme led by China. That's the problem. These people that are talking about China is going to crush the dollar, China is in a lot of trouble. China runs a surveillance state. China runs a ridiculously hard economy to keep going, where they have to borrow money, print money. Oh, they owe it to themselves. Nonsense. That's like saying we owe Social Security to ourselves. It doesn't matter. We just print up the money. The difference is the world still runs on dollars. No one runs on yuan. It's not a reserve asset. No countries hold yuan in any large amounts. So they're on their own with that yuan stuff. And that's what's driving the price of gold higher. In fact, Trump said the other day, he's not technically correct, that the dollar is at an all-time high. There was some dollar-weighted average where he's actually right, but the dollar index is very high. So gold is rising, not because the dollar is collapsing, like all the gold pumpers were telling you, China to crush the dollar, United States won't be... Yeah, eventually the United States is going to have its own issues, but the issues we're seeing right now, negative interest rates, is not a U.S. problem. The United States has a fiscal problem with trillion-dollar deficits, but they have a Fed that is not doing QE. ECB can't say that. The People's Bank of China can't say that. The Bank of England can't say that. All these other central banks, the Bank of Japan, are running massive QE programs and have zero or negative interest rates. The United States doesn't have that. So that's why we have a difference. All right. Thanks, Lewis. Everyone take care. Let's see. Cheers. Gus the Broken. What else? DB Stupid. All right. I think that's it then. So I will bid you all a good night. I'll be back tomorrow. We'll have the Solid Gold Sunday with Smaulgld tomorrow night. Apologies for all of the interruptions. But again, I guess this is why I don't like this particular form. I'm going to put my dimes away and bid you good night. And if I don't have any questions or comments, in 10 seconds, Bernie's going to give you the 10-second countdown. Ready? All right, so Lewis, the 1% and... No, just give me the countdown. Okay. Ready? Yeah. Okay, so I got to start at 10. 10, that's a big number. It's probably the biggest number I understand. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1%, 0. Have a good night.